Hello everyone, welcome to iExamB. In today's video, we are going to talk about the banking system in India and one of the very important aspects of lending, which is the priority sector lending that is followed in our banking system. This is important to know some factual details about the banking system for your credit officer exam for Bank of India. So let's go ahead and understand this topic. When we are talking about the structure of banking in India, we know that the regulator or the central bank in our country is Reserve Bank of India. We have two types of banks, the scheduled banks and the unscheduled banks. When we are talking about the scheduled banks, basically all the banks that are included in the second schedule to the RBI Act, Reserve Bank of India 1934 Act, they are known as the scheduled banks. So there are various parameters based on which RBI includes certain banks in the scheduled list. And when it does so, you will on its website it gives the notification that this particular bank has been included in the scheduled bank, right? And all those which are not included are called unscheduled bank. The various types of banks that exist in India as of now under the scheduled category are our commercial banks, which are further of different types. We have the public sector banks, we have the private sector banks, we have the regional rural banks, foreign banks, local area banks, small finance banks, and payments banks. So we have different types of commercial banks that exist in our country. Various reasons for various mandates that may have. So once we move ahead, we will talk about them. So these two and the foreign bank basically are based on the ownership, while the other banks like our regional rural banks, local area banks, small finance banks, and payment banks, these are the differentiated banks which have been created for a particular purpose, mostly financial inclusion. So for the furthering of financial inclusion in our country, these kind of banks over various years were introduced in the country. And then on the other hand, we also have the cooperative banks, which are the urban cooperative and the rural cooperative. So urban cooperative come under the regulation of RBI. So as we are talking, there were various differentiated banks that exist. So the earlier differentiated banks are the RRBs or the regional rural banks, and then we have the local area banks. The regional rural banks were introduced by the Narsimha committee, and the mandate or the purpose of these banks was to provide and reach the unbanked regions in the rural areas of our country, and especially different states. So these banks have been funded or sponsored by three entities. First is your central government, then there is the state government, and then we have a sponsor bank that has a stake. So these three entities come together. This is 50%, and in the comments box you can write how much does the state government and how much does the sponsor bank hold in these RRBs that they sponsor. Then we also had the local areas bank, which actually cater to 2 or 3 contiguous districts in a particular region. This is more of a dying model now. We only have 2 local area banks that remain in our country as of date. Next, we have the new differentiated banks, which includes the small finance bank and the payment bank. These came into existence by a committee in 2014, which was led by Nachiket More committee. These recommended the establishment of these differentiated banks for furthering financial inclusion in the country. The purpose of small finance bank is to provide credit to small borrowers in the underserved and unserved regions in our country, while payment banks is to provide financial services and transfer services to migrant workers and various other small individuals that exist in our country. There's a new concept introduced about the digital banking units. So digital banking units, this was first talked about by the finance minister in the budget speech, that in India this year we will introduce 75 digital banking units in 75 districts in the country, and these will be this will help adoption of digital banking in the country. Banks already offer a lot of digital banking services in the form of internet banking, mobile banking, lot of payment gateways through UPI, Beam, and other such services are being provided. However, now the purpose of digital banking unit is a digital infrastructure that will be present and where you can avail of all the digital services being provided by the bank. So in this line, the RBI came out with the guidelines related to digital banking units that the banks can set up, and all scheduled commercial banks excluding RRBs, payment banks and local area banks which have a digital banking experience in the past can set up a DBU in tier 1 to tier 6 centers, and these DBU will be treated as a banking outlet for that particular bank. Now let's move on to the priority sector lending. What is priority sector lending? So this is the lending requirement which banks have to compulsorily do to a certain sectors in our economy which are either vulnerable and need credit support, or they are very important for the development of the country. For example, agriculture. It is very important for the development of our country, right? And then MSMEs is another sector very important for the development, plus it is a sector that needs more boost. Then there are other sectors like renewable energy, social infrastructure, housing, education, because it's very important for our to support education in our population, and therefore loans given for education purposes also are characterized as priority sector lending. So what are the limits that the banks have to follow? This depends on what type of a bank you are. If you are a domestic scheduled commercial bank, you have to lend at least 40% of your adjusted net bank credit or credit equivalent of off-balance sheet exposure to the priority sector. So various sectors that have been mentioned, these sectors also have certain limits up to which they will be treated as a priority sector loan. So at least 40% the domestic scheduled commercial banks have to follow. This 40% further has certain sublimits for agriculture, then small and marginal farmers, then weaker sections, they are also mentioned. Then foreign banks with less than 20 branches, they have to meet for 40% of ANBC again. However, 32% goes towards the export sector and 8% to other sectors. For regional rural banks and small finance bank, this limit is much higher because both of these are differentiated banks that were brought in for the furthering financial inclusion in the country. So they have a higher mandate to follow of 75%. Then this in the last update for priority sector lending, RBI also introduced the priority sector lending guidelines for primary urban cooperative banks, and they have to also reach 75%, however in a phased manner. So they have to go up to 75% by 2024. When this was introduced in 2020, they were applicable at 40% like other domestic scheduled commercial banks, but they will increase it to come in line with RRBs and small finance banks. So what about payment banks? You can write in the comments box why the limit has not been mentioned for payment banks. I will also tell you the answer by the end of the session. Let's move on to the Q&A. First question, on the recommendation of which committee were the RRBs set up? The answer is Narsimham Working Group, which was there in 1975, and after its recommendations in 1976 through the Act Regional Rural Banks Act 1976, the RRBs were set up. As of date, we have 43 RRBs in our country. Next question, in the budget 2022-23, the budget proposed to set up how many digital banking units in our country? The answer is 75 units in 75 districts, in line with which RBI has now come out with guidelines also. Third question, small finance banks have to lend up to how much of their ANBC to priority sector? The correct answer here is 75%, as we have discussed in detail in the I like to remind you about the free mock tests that are available at iExamB's website. You can practice for 100 plus exams, 1000 plus free mock tests are available for you to practice. Next question, which of the following has recently submitted a report and has called for allowing 43 regional rural banks to convert into small finance bank to provide them with a level playing field? The correct answer is SBI. So in India, the urban cooperative banks were allowed, and even the microfinance institutions were allowed to voluntarily convert themselves in the small finance banks if they met the guidelines related to be a small finance bank. So SBI in one of its latest reports has suggested that similar should be provided to the regional rural banks also, so that the ones which have enough capital and experience, they should also be allowed to convert to a small finance bank. Last question, recently in May 2022, RBI allowed the facility of lending by banks to NBFCs for purpose of on lending to priority sector on an ongoing basis. Initially, this was allowed up to March 2022 only, but now RBI has said that this is helping and we should allow it on an ongoing basis. So under this, bank credit that is given to NBFCs for on lending, up to what extent is allowed to be taken as priority sector lending? You can write the correct answer in the comments box. Now also coming back to the question that I asked before, why was payment banks not included in the PSL targets? The answer to that is payment banks cannot lend. So there is no credit allowed. Payment banks are not allowed to lend, and therefore priority sector lending guidelines do not apply to them. Thank you everybody. You can see on your screen the schedule for the live classes that we are conducting in our Bank of India Credit Officer online course. If you want to avail the benefit of this, you can avail the course as of now at a flat 60% offer by using the code BOI 60.